Welcome back to the channel, everyone. Today I want to talk about the fact that the SEC have been paid off by Citadel, and I also want to talk about some kind of scandal that's been going on as well. So stay tuned and let's make some money. But before I dive into the video, if you haven't already, be sure to sign up to BlockFi using my link down in the description below. BlockFi is a cryptocurrency investing app where you can not only invest in various different cryptocurrencies, but you can also earn interest on your deposits, you can also get crypto-backed loans, and even sign up for a BlockFi credit card that pays you cash back in crypto. Linked in the description below. And now I want to dive straight in with the key information. But before I get into it, a lot of people asked in my previous video, what happens if Robinhood actually goes bankrupt? Do you lose all your money that you've currently got in Robinhood? And all of the stocks that you're holding in there as well. I mean, hopefully by now you would have actually transferred out of Robinhood over to Fidelity, a broker that doesn't use payment for order flow. But if you're stubborn and haven't yet transferred and want to stay with Robinhood, I guess that's fine as well, but I can understand the worry. Just remember that Robinhood are SIPC insured. Now that means obviously if Robinhood does go bankrupt, all of your deposits are insured up to $500,000 per customer. Now, obviously, if you do have a trading account with $1 million in Robinhood, yes, if they go bankrupt, you're only insured for half of that. But if your investing account with Robinhood is smaller than $500,000, well, you're covered under the insurance. And now let's get into it. Kat Stryker tweeted again this morning saying, everyone in New York, we are all set to fly tomorrow, October 1st, which is obviously today, 11 till 2 in the Hudson corridor. And this means that the plane would have been visible from the Citadel building, but also visible from the SEC building as well. Need all cameras available. And here is a brilliant photo of that plane flying around with hashtag Citadel Scandal on the back. Now, obviously by now, you all know about the Citadel scandal, but what you might not know about is the new SEC scandal. New SEC General Counsel paid by Citi and by Citadel. The newly appointed General Counsel at the Securities and Exchange Commission has received more than $2 million from banks, including Citigroup and Citadel. Fresh out of his position as General Counsel at the CFTC, or Commodities Futures Trading Commission, at the same time as Gary Gensler was its chair from 2009 to 2013, he went to work for the same entities he previously oversaw. He became a partner at WilmerHale for 5 years until 2018, where he received a long list of payments from banks, hedge funds, and other financial institutions. This shows that the current General Counsel of the SEC is paid money to provide legal services to Citigroup, Barclays, Citadel, UBS, Andreessen Horowitz, JP Morgan, StockX, and many other companies and institutions as well. It does not specify just how much money he received from any of the banks, although it is over $5,000 at least per bank, but seemingly he's running his own workload under the umbrella of WilmerHale, and thus effectively receiving payments directly from these financial institutions. After fattening his pockets with what in total is a payment of some $2.5 million, he went back to the CFTC, but he did not stay there long, as starting on November the 1st, he is to join his former boss and former Goldman Sachs partner at the SEC during a fairly crucial time for the agency. SEC's chair Gary Gensler promised to report on Gamestop by the end of summer. Summer has gone and there's still no report. Although I do have a Reuters article here that shows what actually is going to be inside this SEC Gamestop report. Citadel is accused in a class action lawsuit by GameStop traders of pressurizing Robinhood to freeze GameStop stock buying during the short squeeze in January. The SEC has not stated it will investigate such allegations, with Gensler instead talking of the gamification of stock investing. His buddy will now perhaps help him further with that focus on gamification after getting his checks from Citadel, but whether the report will or will not address the crucial allegations remains to be seen. And now something else I wanted to quickly touch on is, funny enough, a tweet from Charles Gasparino. Breaking news. Sources tell Fox Business that Robinhood employee trading is currently being scrutinised by the SEC. Specifically those trades made by the firm's president who sold shares of AMC during the meme stock frenzy just before the buy button was turned off. Although supposedly sources say that Robinhood's position in the trades aren't illegal somehow. Story developing. Now, Reuters have given us a preview of what to watch for in the US SEC's GameStop report. The SEC plans to soon release its long-awaited report on the Gamestop trading saga, and it could have implications for brokerages, wholesale market makers, exchanges, and retail investors. The SEC report is expected to address the issues around the market chaos in late January, when a flood of trading through a commission-free retail brokerages drove shares in GameStop Corporation and other popular meme stocks to extreme highs, squeezing hedge funds that had bet against them. Amid the intense volatility, several brokerages restricted trading in the affected stocks, curbing the rally, infuriating retail traders and rattling market confidence. Here are some of the topics the SEC has said that it is scrutinising: the gamification of trading, payment for order flow, market maker concentration, exchange pricing, clearinghouses and settlement times, and short selling disclosure. Now I have to admit that is really disappointing. We've already known about all of these topics for months now, and none of them are really too important or too impressive. I mean, yes, obviously trading shouldn't be gamified. It shouldn't be attractive to young people to invest and potentially lose all of their money. And yes, payment for order flow isn't good because it incentivizes those retail trading platforms to sell their order flow to the highest bidder. But I mean, to some extent, even without a payment for order flow, it wouldn't surprise me if Robinhood still gave their order flow to Citadel, because they need someone to route their trades for them. Again, market maker concentration isn't great because having Citadel as the one dominating force is never good, because they can do whatever they like and face no consequences for it because they basically have a monopoly. Exchange pricing, I guess, is the only good one because it's talking about how many trades are executed away from lit exchanges in the dark pools, and therefore maybe the SEC do want to actually ban dark pools. But what it doesn't do is announce any kind of investigation that's been going on into market manipulation and abusive naked short selling and all of these things that should be illegal and or are illegal. It seems that yet again the SEC have just walked in, covered their eyes and told us that everything is fine. Although on the flip side we did have some good news from Aron yesterday as well. We were able to buy back at par $35 million of AMC's most expensive debt, with its 15% interest rate. That saves us more than $5 million of interest costs each and every year. Progress is made when you take a big step or small steps. The important thing is that you're moving forward. Obviously this does improve the bull case for AMC and disproves that short thesis even further. And finally, you may have noticed that Bitcoin's price popped today. Data shows that $200 million worth of Bitcoin shorts were liquidated overnight. 40,000 short traders just got wrecked. The title speaks for itself. Don't short Bitcoin. I do think that after that AMC squeeze, I'm going to be transitioning my channel into more of a cryptocurrency channel. With cryptocurrency, hedge funds don't get special exemptions and free passes. The market's more of an even playing field. And I do think that going forward over the next few years, cryptocurrency is going to present us some brilliant investing opportunities. Not only in Bitcoin, but other major cryptocurrencies as well, like Litecoin and Ethereum, and also smaller, lesser known cryptocurrencies on top of that. Guys, be sure to let me know down in the comments below what you think about the General Counsel of the SEC being paid off by Citadel and other institutions. And while you're down there, if you haven't already, be sure to sign up to BlockFi so that you can invest in cryptocurrency and even earn interest on your investments. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.